Tell us a little bit about what you're seeing, because we have seen that U.S. exceptionalism narrative play out for quite some time. Is that still ongoing?
Well, we know how important the US equity market is. It makes up about 60% of the global market cap. So those investors that are not invested in the US equity market are really missing out on being able to express their views in a highly liquid, highly transparent market. So far this year, the S&P 500, the bellwether for the US market, is up an impressive 11%. And we've seen growing interest in non-US investors diversifying their portfolios, including US equities.
Where else would they go after the U.S. markets, especially given the incredible rally that we've already seen?
So we've seen real interest in overall developed market equities. So the S&P World, which looks at developed markets, is up a similar amount this year. It's heavily weighted to the US, but also has a large exposure to Japan. And so we're seeing investors look to a broad, diversified, developed market, but also look at other strategies, whether that be an equal weight strategy in the US market, or maybe even trying to play sectors in looking into the US election.
I want to get to the U.S. election and the risks around that. But here in Japan, we have seen that corporate governance narrative play out for quite some time. How important is that for a sustainable rally from here on out?
It's certainly one component of why we've seen a really impressive rally in Japanese equities. We've obviously got, a depreciating yen. We've got the first signs of inflation. We've got economic stability, and we've got improvements in governance, whether that be around the cost of capital or really taking more care of shareholder value. So it's certainly one part of the broader picture here in the Japanese equity market.
And the Japan success story, Fiona, has kind of expanded beyond its borders, right? We've seen optimism when it comes to Korea, maybe seeing a similar success. Are you seeing other markets benefit from that optimism?
I think, Japan really has led the way. We've seen, reasonable performance in Korea, similar in China, although there are other issues there. And outside of the Asia Pacific, really strength in any of the bigger developed markets.
And of course, Shery might speak a little bit more about the yen weakness, but overall, how have you seen currencies really play into some of the flows?
The currencies have an enormous impact on flows, and particularly when we see, currencies like the yen or the Korean won at such extreme ends of the scale. And so, they have a big impact on how investors look at where they're putting their money, but also when they're looking at how they're constructing their portfolios, and the impact of those lower values really can drag down sometimes their performance in local currency.
Fiona, AI is obviously front and centre. It's been one of the reasons why we've seen almost singularly the outperformance of US stocks. Do you see that as being a major driver, and does that sort of widen the breadth of flows that you see across other markets, not just in the United States?
It's definitely one of the main thematics that we see and in the US, but also outside of the US market. If you look at the concentration in the S&P 500, the top 5 components there accounting for about 26% of the overall market cap. So we're definitely seeing the impact in the bigger markets. We expect that thematic to continue, and there are various ways that market participants can look at playing that, not just in the US.
And on that US political theme and the presidential elections coming up, how are investors really focusing on this issue and starting to trade the campaign?
Well, it's such a fascinating year. We've had elections across the globe, and as you said, we'll get the final results from India today, and we just roll on until we get to the end of the year where we have the US election. We know in the past that investors have looked at sectors to play different themes in the election, to look at how different candidates are going to or say they're going to deal with different issues. So whether that be investors looking at sectors like infrastructure or technology or playing consumer staples based on how they think the US economy will fare during and after the election.
What's interesting this time around is that we've actually seen the tenures of both presidents, right? President Biden and former President Trump as well. How did the investors deal with the markets during those times? And what are the expectations right now of what could happen next year?
So we do see in the past that investors look at the sectors. So while the S&P 500 itself maybe won't change, we have history that says it doesn't necessarily change all that much during the election, we look at the dispersion within sectors, and that can change enormously. As you said, we've seen both of these candidates before, and so we assume that investors will be looking really closely at that to try and get a gauge for what we might see come November.